Assalamualaikum everyone. Welcome to JS Investments REIT webinar. I'm Musab Iqbal, Vice President REITs at JS Investments, and today I'll be presenting you about Karachi's office market insight and outlook. But before we deep dive into our presentation on Karachi office market, I would like you all to be introduced to my department. So, here at JSR REIT, our ethos are deeply rooted in leveraging the transformative power of data to unlock the true potential of real estate. We are committed to future-proofing real estate investments by integrating advanced data analytics, thereby ensuring that our operations not only navigate but also anticipate the evolving dynamics of the market. This strategic foresight allows us to chart a course towards real estate success with unparalleled precision, ultimately enhancing investor value over the long term. Our approach is designed to not only redefine the landscape of real estate investments, but also to do so in a manner that is both forward thinking and effective, securing a sustainable and profitable future for our investors. Now, this takes us to understand what is REIT. Real Estate Investment Trust facilitates the transformation of tangible real estate asset into a financial instrument like mutual fund through transferring the property to a trustee by a REIT management company called RMC. This allows investors to own property through unit holding based on their net asset contribution. Such an agreement affords unit holder a tax advantage at the corporate level on income generated from the property, either through rental income or sale proceed, which is then distributed in the form of dividends. Moreover, the REIT structure through a reputable RMC brings a lot of benefits, which will be discussed in the next slide over here. But before we get into the benefits, I would like to discuss a little bit about role of a REIT management company. So it is to comply with all relevant SECP REIT regulation requirements. It is there to work in the best interest of investors, and it has to be completely transparent. Now, as you can see on the right, there are various benefits, which includes experienced real estate professional, a background in diverse portfolio management, sophisticated analysis tool, access to institutional resources, capability efficiently time the market, professional network, and so on and so forth. I'll move on to my next slide. Terms to get familiar with. Now, there are two types of grading of office space, which is grade A and grade B. Now, I'll get into a little bit specifics. For grade A office space, in construction and design, they're generally new or newly renovated developments with high quality construction material and cutting edge architectural design. They incorporate energy efficient system and sustainable building practices. From technological end, these buildings are equipped with latest technology, include advanced telecommunication infrastructure, high-speed internet, and smart building management system that enhance security, efficiency, and comfort of the tenants. From the amenities perspective, there are premium amenities, and they are a hallmark of grade A space, including but not limited to concierge service, fitness center, high-end dining facility, on-site parking, and sometimes even childcare services. The focus is on creating superior work environment and that enhances productivity and employee well-being. From location, it has to be, again, grade A location, situated in prime business districts or highly desirable commercial areas. Grade A office spaces offer prestigious addresses. They are typically well connected by public transport and are in close proximity to major highways, airports, and city centers. Such as lease terms, due to their premium status, grade A office space command higher rental rates. Tenants are often high profile, corporations and businesses looking for a space that reflects their brand and prestige. From grade B perspective, they're more or less like grade A, but slightly 2, 3 notches down. Such as in construction and design, they're generally old and may not have a cutting edge design or the same level of finish as grade A spaces. From technological end, may not have as advanced telecommunication infrastructure as grade A. Amenities might be limited, location might not be grade A or highly desirable location, lease term. They have more affordable rental rates. Grade B space attracts broad range of tenants, including startups, small medium enterprises, and businesses that prioritize functional space over prestige. Now, let's get into some key insights of Karachi grade A and B office market. Well, despite macroeconomic uncertainties, the businesses in Karachi have showcased their resilience throughout varying ordeals. This is evident through the demand for office spaces in Karachi, with an average of 86% occupancy for grade A and B office building, and rental yields growing by 14% on year-on-year basis compared to 2022 to 2023. Now we get into the inventory available within Karachi for grade A and B office space. So according to JSR research, the estimated supply of grade A and B office space in Karachi is approximately 5.7 million square feet. The majority of estimated grade A supply is mainly situated in Clifton, that is recognized as one of the emerging central business district called CBD areas. Clifton currently holds approximately 2.9 million square foot of grade A and B office space, followed by Shara Faisal with an allocation of approximately 1.6 million square feet of grade A and B office space. It is estimated that Karachi will add approximately 2.8 million square feet of office space in next few years, which is going to be concentrated in new central business district areas such as Clifton, DHA, and Shara Faisal. However, with rising cost and import restriction from authorities, a myriad of challenges has been brought to developers in meeting their developmental timelines. So, based on JSAL research estimated survey of upcoming office development in Karachi, we anticipate that only 8 to 20% of total upcoming office inventory may become available in 2024. Co-working flexible office space now are observed to be on the rise in Karachi with prominent players such as Regis, Kickstart, and Hive that have reached optimal occupancy levels and continue to expand in the city, substantiating Karachi's status as the economic hub of the country. Some MNC, like multinational companies, have shown significant interest towards renting out tier 1 flexible co-working spaces. Now we'll move towards demand side. Again, the Karachi office market has experienced a notable increase in occupancy levels, reaching an average of approximately more than 85% in the quarter of 2023 compared to 78% in the corresponding year of 2022. This surge is primarily attributed to a pronounced scarcity of grade A office space in Karachi, where the occupancy has averaged more than 95% for the year 2023. Despite grade A office supply of approximately 1.7 million square feet, occupancy has witnessed a year-on-year growth of 5%. Additionally, the grade B office space has seen an average occupancy rate of 91% for the year, with a year-on-year increase of 7%. Karachi office market rental yields for grade A and B grew on average by 14% on year-on-year basis. This upward trajectory not only underscores the vitality of the Karachi office market, but also position it as a significant contributor to the economic landscape by surpassing the country's average GDP growth rate. Recent grade B plus development situated in new CBD areas have already achieved occupancy rates exceeding 90%, underscoring a substantial demand for grade B plus development as well. Now, this takes us to the last slide on Karachi grade A and B office market, where we discuss about outlook. Karachi's resilience is a testament to its robust office fundamental, positioning the city effectively as a prominent financial hub of the country, despite the challenges posed by the economic landscape of 2023. JSIL research expects the momentum to maintain stability throughout 2024 with minimal fluctuations in demand. This analysis suggests that the interplay of demand and supply remains a critical factor, with current grade A buildings maintaining average occupancy rates above 90%. This high occupancy level articulates a forthcoming acute shortage in grade A developments. This projection is attributed to the expected delay in the upcoming inventory in the city, potentially exerting pressure on the existing grade A supply. Consequently, this scenario positions Karachi office property owners in a favorable stance for base rental escalation, while currently enabling them to optimize cost-saving measures to enhance net rental income. Grade B tenants are observed to be majorly price sensitive. However, the positive outlook on Pakistan's macroeconomic landscape, coupled with a forecast GDP growth of 2%, suggest a sustained occupancy of Grade B office spaces by businesses in Karachi. Rental yields are expected to grow, but at a more modest pace in 2024 compared to 14% in 2023. Thank you, everyone. This is our last slide. We'll now move toward our Q&A session, and we'll take your questions and answer them accordingly. Thank you. So now I'll just look for some questions that we have received. Okay, so there's one question that's very interesting. Does supply deficit of grade A office space affect grade B occupancy and rental escalation in 2024? Yes, there are going to be some impacts, especially with the supply deficit of grade A office. A lot of the companies that require grade A office space will then be looking to get into grade B office spaces, will obviously increase the demand for grade B since the upcoming grade A developments are taking time to come online and are not anticipated to come online this year. So we see that a lot of pressure will then offload from current grade A to grade B. Although these companies that acquire grade A office space will still be looking for grade A location, but may discount themselves on the development overall. Okay, then we have another question. I am developing an office space in Karachi. How REIT can benefit me? Well, REITs have a lot of benefits, as we have discussed, that it has a lot of tax advantages. Also, you have the professionalism of the people within the company that have expertise in managing real estate portfolios. It's very transparent and yeah, so REITs again, they have various benefits if the development comes into REIT. The plans actually get sense checked at our JS Investments REIT department. We hold an RMC license. We are a REIT management company, so we can be instrumental. Then we have another question. There is one question that's very interesting. So how can I benefit from the appreciation in property values? Are there any REITs in this space in Pakistan? Well, property appreciation values are taken as unrealized gains. Any property value gain is unrealized until it is sold. So again, it's since REIT helps in dividing the whole real estate into a unit holding. So every unit has a price to it. That price reflects the unrealized gain to it as well. And if you're a unit holder, the rental income gets distributed. If the property, commercial property is on rental basis, the rents are then given in the form of dividends. And if you want to realize the gain or the appreciation within the property values, one can then sold their unit holding and realize the appreciation. How much are the approximate rentals REIT earn as percentage of investments? As far as percentages are concerned, so within real estate, there's a term called capitalization rate, which is the annual yield or annual return on the property invested. I think it's not the rental REIT, it's dependent upon the property in itself as what it is classified as. So all of these different properties have different, or these asset classes have different capitalization rates. So those are the percentages you may expect from the investment in a particular property. And I think that would be it. And I think it has been a very interactive session. And I hope everybody have enjoyed our insights and outlook. We look forward on bringing you more webinars on REITs like this and discuss on the outlook and insight of different real estate in Pakistan. Thank you everyone for joining us and take care and Allah Hafiz.